The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this Tuesday, October the 20th. October's almost gone. It's unbelievable. Yep, time flies when you're having fun. Now, this is going to be very interesting. Why? Because I think we heard in the many hours we've had since the early morning shows began here at TFNN that there's let's put it this way, there's overhead resistance and there are a number of factors involved. So let's just run the numbers, then I'm going to go through the technicals as I see it. So looking at the different charts, we've got the Dow up 11. It was down earlier. Now IBM is down 7. But hey, UTX comes out with a lousy report, but they buy back the stock. This is the age of the phenomenon of buying back stock, borrowing money to buy back your stock. Eventually you pay dearly for that, but in the interim period, it could be very successful. So UTX is up very sharply to counteract the IBM slump. We've got the Dow up 10 at 17,241. I'm saying the 2,480s area, very strong between 17,220 and 17,280 today. Just really strong resistance. The S&P at 2,034, up 82 cents, holding quite nicely. You've got the comp index down 15 at 4,889. That's telling us more of a story. Gold is up 4 at 1176. Silver's up 4 cents at 1584. Platinum is up 8 at 1,021. High-grade copper is still stuck in that 2.35, 36 area. It's at 236.80. And you've got crude oil at 46.30. Now, the bonds, the December bond is down over a point at 157.10. The TLT is down 81 cents at 122.78. I said to subscribers to my opening call this morning, you've got to watch this carefully. Bonds must hold the 122s at this particular stage. Hey, let's look at this pattern. You remember when I did this the other day, I showed, whoops, let's move this over to the side. And I said there's a technique in the Chapman wave that I discovered way back when I used to hand chart back in the, sounds like prehistoric times, back in the I think it was 86 or something like that. I remember a friend of mine had a French fund manager staying with him. This was on something completely different, but he invited me over since we had something in common, and we were talking, discussing things, and I discussed with him the charting that I did, and I was hand charting at the time. Yes, I did have a computer, but in fact, what we were looking at was more in the area of continuing what I'd been doing for a long time, charting by hand, the Dow, the S&P, the FTSE, and the Nikkei, because that Nikkei, I remember extending the geometric paper, graph paper. I had to keep taping pages and pages because it went up to the 19,000s. Yep, the Chapman wave actually did give this exact signal for the top in the Nike. Now, what happened was, here I am, I'm discussing this and I'm showing my chart patterns to this friend, to a colleague of my friend, and I said, wait a minute. He wanted to know about the chart. I said, well, I've got something really strange going on here. I keep expecting a pullback, but every time I have to draw another line vertically higher because there's an extension to the upside. It's like I didn't know how to explain it, but I said it's like a single leg that just goes higher and higher. Well, I followed that, and then it formed an oval pattern. And I'm looking for a short. Actually, I was doing puts at the time. I was doing options. I was looking for put positions. Kept waiting. Eventually, that single leg up made this oval body, and then out of the blue, it popped up again. Now there was a pattern that I used to talk about at the time for my. I had a market letter called Market Lines, and what was really important about was that there was a technique that I followed that was like a fulcrum. It was like a propeller shaft. It looked, I'll draw it over here. It looks something like this. It goes straight up, and then you get your little oval pattern, like that. And then you would get another oval pattern to the upside in the same distance. It's almost like an A to B equals C to D, except I never knew anything about A to B equals C to D. I just talked about measured moves. Well, as this was unfolding, I said, you know what? This really looks like a stork leg. I had gone to visit some friends and where was it? New Orleans, I think, at the time. I can't remember, something like whatever happened. I'd gone down and there was the stork blowing in the wind at the zoo. And my wife and I looked at it. It was almost transparent. It was standing on this leg and the wind's blowing and it's got this huge body and you've got the neck and it just didn't move. It was absolutely straight. And I thought, wow, that's... So this pattern looked like a stork leg. And what a stork leg says is that there's a pattern that goes straight up. It doesn't matter about the Chapman wave peaks. This is just it's like a single line move. Remember, markets move only in three ways: straight line up and down, arch, or cup. And the arch and cup could be a variation with a V and an inverted V. That's not the point. The point is it's straight up, or you're going to make a rounding thing that comes back to a base, or a cup that comes back to the lip on the top. So here we are. I said, and so this is a pattern that I think here at TFNN, many of our long-term listeners are used to. I call it the Chapman wave stork leg formation. Goes straight up, forms this body. Now the body is an oval pattern. It is not a rectangle. There are big differences. This is an oval pattern. So here we go. In the E-mini futures, the 120-minute chart goes leg, body, neck, and the neck somehow. The neck has variations, but basically what happens, you form the neck, form the head, and then you start down and you create the beak. The beak is the most important thing. Why? Because it should touch or go into the body. In this case, 1991-25, well, it went down to 1982-50. The rule of the Chapman wave stork leg formation is that the moment it completes the beak, how does it complete the beak? Well, a whole bunch of techniques are involved, but as soon as it completes the beak, watch out, there could be a really strong rally back again. And that's all it says. At that point, you have to use other techniques. Hey, other techniques? Wait a minute. Didn't we just form, I showed my subscribers this morning, a leg, a body. I showed this yesterday, but the body extended a little bit more. Oval, there's no question, this is not a rectangle formation. This is an oval pattern. What was I expecting? The neck needs to go above 2028. It doesn't say how high, and it did go. It went to 2031.50. Now it's pulling back quite sharply. What is it pulling back to? It's pulling back underneath the 2028 body. So this is a very important period because it says there is a chance, and I do say a chance, that we might have formed some near-term top at this particular point. We've got a number of little dojis in the different charts going to this most recent high that we just made intraday. So now you've got to be somewhat careful. Now I just want to take this and move it away so that I can do the other things that I want to really talk about, although this is a very important moment for the E-minis. I want to talk about the patterns that we've been looking at and why it's so important to be looking in both the index and the comparable ETFs. Let me show you something. The Dow, INDU, has gone to a leg E, and I was anticipating there'd be a narrow trading range today, and we've got a whole bunch of plans here that says if certain things happen, we've got to do certain other things. This is the Dow. This is the 120-minute chart, and this is really I have to tell you, this is the most fascinating for us analysts. It is the most fascinating market. Why? Because look, the Dow went to a peak D, pulled back. That was on the 12th. That was on the 15th at 11:30. It pulls back, and then it goes to 44.39, 44.42. So this is leg A, E/E right there. And then it goes up to, so that is at 219.18. And then it goes to 220.02, 215.97, 219. And now we've got to ask the question, is this E/A going to an F/B? Is that what I had over here? Dow analysis. Oh, that's really, sometimes, just occasionally, there's a question. That's 44.39, 44.42. Oh, that can't be it. That has to be. Yeah, that's exactly right. I knew that it was getting a little squashed over there, and I should have opened it up to see. So this is F/B. All right. And the VIX index is up 38 cents at 1536. And what I said, every day I give this overview, and in the overview section, I discuss these five quintiles, and the 120-minute chart Dow, the 120-minute VIX, the short-term trading index gave a fantastic signal 3 days ago, and we got the result yesterday. And there's this extension in the daily Dow and the daily S&P, leg E. I'm calling it E for now. That's why it's such an important moment. Now, if I've got the VIX index, and I believe that this is correct, that it went 1482, 1487, 1472. Leg D to the downside. Now the VIX is able to rally. Okay. It doesn't say it has to. It just says this would be a good point for the VIX to rally. You see the cup formation that's forming here, and you see the arch formation that's forming there. So if you look at this pattern, you'll see that very often we get the mirror image, and you start to head down when these two extremes are hit, and it just goes inward, right? Okay, let's get back again to our story, because this is, and Tom was saying, it's a very important moment. I would say it's an important moment on the shorter term. Intermediate term, other things have to happen, but at least shorter term. So here we go back again. There's the 200-period exponential moving average in the Dow right there at 17,280. Today's high, 264.88. So we haven't hit it, but we're in the range. Here's the up channel resistance area. We got there. Now the 9-period moving average of 17,076 is going to be important. A close in the Dow in the next 2 days below 17,966. I'd say this entire week will be really important. But on a very near-term basis, pushing lower, at least being dragged lower towards the 17,170 area, close under 17,170 at any point today, will start to signal, hey, you got to be a little bit careful. All right, so now we've got that out the way. Look at the diamonds, the DIA. There's a slight difference because it had almost touched the 200-period exponential moving average. The Dow missed it, and that is at 170, if I can just click on that. No, that's the one. 170, I believe 172.73, and the high today was 172.39. So we're right in this area, but you can see there's a much narrower distance between the high and the low, 170.59. Now, what's interesting is that in the diamonds, I've got a leg C. That's the only thing I can count. That's why I wanted to show you what's happening. Look at the SPY. The SPY has got A, B, it actually went to an E today, and the SPX, SPX.X. I like to finesse these whole things. I want to see everything line up nicely. Let me just see some, leg E in the E-mini, in the S&P itself. Hey, very interesting. I'll be back, and we'll talk a little bit more about the details straight after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, we are. We're looking at the S&P, and the S&P has gone to a leg E. The SPY has gone to, so it was the Dow that was the one that had the differences. And I'm inclined to think right now that the upside is extremely limited. This is just the short term. We've got to go one step at a time. What I've been discussing for a little while is in a number of the indices, and I'll do it now. I was asked about the SPY, and I'm going to do the SPY. Look at this weekly chart. If you extrapolate and you take out this aberrational move, this what I call the crazy trade at 212.97 in the SPY that was made back in the week of December the 19th, you remember that was right at about 3:52 in the afternoon. Someone hit a button, and I don't know why. I don't even know how they got the trades off, but they were There were in fact trades at 212.97. I kept expecting TradeStation, which has really great data, to if I pressed what was it, Control R, it kind of reformulates and goes through all the data and corrects any incorrect data. Well, it never cared. I kept doing that and nothing happened. So we had to accept it. And then I spoke to Tom and I said in one of our interviews, and I said, Tom, you and I look at these crazy trades that we see sometimes, a little spike, and it's so often that the price eventually gets to that level, even though at that moment it looks like crazy. There's no way on earth. Well, the S&P did go above 212.97. It went to 213.78 for its peak E. Sell mode in the weekly chart back in the week of the 22nd of May. And that went to trough A, trough B, trough C, and it plummeted to 182.40. And then had that was on August 24th, and then had that huge upside spiral. And now it's struggling, but it's in leg B, and I drew in this H pattern right here, where it goes from the lowercase h to a lowercase m in the weekly chart. But what I'd shown in other charts without that aberrational move, if you take away that spike, basically what you've got from the October low of 181.92 is you've got a left side shoulder right there. Then it pulls back, holds very nicely, and then makes the head, a rather large head, going to a peak E, arch formation at 213.78. Not only retests the 197.86 low, it plummets all the way, but doesn't break 181.92 low of October. It goes to 182.40. What is that, 38 cents or something away? It must be more. It must be 48 cents away from touching that low. And then it rallies sharply. The SPY comes all the way back from 182.40 to today's high. There is 203.84. But wait a minute. Where did I draw it? Did I draw it on the New York Stock Exchange? Did I draw it on the Dow? Let me just see. I actually notated it and I drew it in. I SPY, maybe IWM. I just want to see, otherwise leg body, that also did the same thing. So then we've got QQQ. You know, I drew it. Oh, maybe the New York Stock Exchange. All right, I can't find it. So we're going back to the SPY, or probably S&P. No, I didn't, because I know I did the S. Oh, I discussed it, but I never actually, maybe I didn't draw it in. But basically what we're looking at here is the left side shoulder, head, pulls back, and now we're making the right side shoulder. The resistance on the left side is 208.97. Let's skip that 212.97 for now, because it really was an aberration, although it was eventually hit. 208.97. So we are way underneath it at 203.84. But not the point. The point is that in time, in shape and pattern, we are forming a right side that says there's a channel, there are a bunch of things that says in this area, especially if you're looking at the 200-period moving average to the 200-period smooth moving average at 206.04, this is the area that you should start to expect that it gets harder and harder for the key indices to go much higher. That's number one. And number two is this is also the area where you start to see failure patterns. And what would happen is on a larger failure pattern, in different sectors, that is. But in the SPY, I just wanted to say that a larger failure pattern actually has to take you all the way down to the neckline of the 182.81 area. So that's a long way to go. 20 points, over 20 points. It's like 2,000 Dow points. So I'm just doing one step at a time. At this point, the stochastic is at 97%. The MACD is still very strong. I don't really, yesterday we took a short position in the volatility index, got stopped out really quickly for a very small loss. Thank God, because it actually went down huge. So I'm not even going to touch that right now unless certain things happen. And if those certain things happen, subscribers know exactly what to do. And that'll be after 11 o'clock. We're already 11:35-ish, 11:30-ish. So from this moment on, if those levels are hit, we'll activate certain things. So I just wanted to show that, there was a little discrepancy. Now we've got all the little ducks lined up. This is a very important period, but I still see upside potential. I'll be back and I'll explain why.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman back here. Dow's up 3, S&P is down 30 cents. This is a consolidation phase we spoke about starting last week, Thursday. I said that probably going to be going to some kind of consolidation phase. Hey, I was asked about Priceline. I got an email yesterday. I didn't see it until just after the show finished. I had discussed this last week. I drew this in. I said there's a left side, right side price time match, PD at 13.95 in Priceline daily, round number high. It pulls back. That was back in beginning of August, and then was that on 3rd or something? August the 5th, and then by the 24th, the low is 11.51.01, missed it by 1 penny, another round number high, and then it goes to peak A, B, C, pulls back sharply. You remember the Chapman wave? It doesn't matter how sharp you pull back, as long as you don't break the low, the left side low, the initial starting point. So this continues the wave count. It goes to D, it goes to an E. Now, everything about the characteristic of this particular leg up, like the Dow and the S&P, has the characteristic as if it's a brand new buy mode. This looks like it's more like an E/C. Doesn't matter. Stochastics at 89%. The MACD is strong. The weekly chart also has that same pattern. And what I'd said is, in the cup formation, there should be a move right there. A move that takes you by the week of the 13th of November to 1395.01 for leg D. I still think that you're going to get a leg D. The question was, should I short? A number of people looking at Priceline and some of these very high price stocks to potentially short. Why? Because, you could short a lot of shares in a small priced, lower price stock, get the same percentages. But when you're looking at something that is at 1373, if it goes to 1397, say, just to leg D and extends this daily move, and leg D then in the monthly chart, and it does start to pull back, it could pull back very sharply. And then with that one stock, you could in fact be garnering huge dollar amount profits. So it comes to the same thing. It's just a different vehicle altogether. And I've found, for my own purposes, that that very often having a higher price stock that we short allows me to give you usually don't go much more than 5 points, but maybe 3 to 5 points of a buy stop, because I'd rather get stopped out once or twice and then get it right, because it really makes you good money. And you've got yourself, 1 to 2% risk. It's a big point position because $6 is $6. But on the percentage basis of the actual stock, it turns out to be quite small. And it gives you a little bit of flexibility, because these stocks, when they start to top out, sometimes rather than that extended long leg that you get to the top, like you got on the news-related 1395 spike back on the 5th of August, most of the time tops are made where it's just nominal new highs and then it pulls back. So we're looking at this, and I would suggest hold off, have patience. You just need another 21, 25 points or something like that. Have patience. If it turns around from here, okay, then it will fail to make that D. That's just going to be really unusual, this pattern that I'm looking at right now. It should go to a slightly high. Now, that's one of the reasons why, this is what I wanted to lead to, why when I'm looking at the VIX index, see, the VIX index is very low, but it's in the 15s, not the 13s or 12s, which says, be careful, you can stay down here a long time. In the 15s, it allows you little pop-up possibilities. So I'm saying, the VIX index is flattening out, the stochastic's flattening out, no real signal. The signal might come if it's at 1532, that out of the blue you start to see a trade in the 1660 area. Let me see, is that? Yeah, 1660 to 1680 area. That starts to turn around, and the VIX actually goes from 2.5%. That's nothing. Can you believe that the VIX just the other day was up in the 90s, and now it's where, and the VIX that's the VIX stochastic, was in the 90s, and now it's at 2.5%. And the price was in the 53.29 area, and now it's at 15.30. We just missed shorting the VIX actually through another vehicle. What a pity, just like 3 days after the top. But that's the way it is. That would have been a nice short. Now, let's look at this and say, what can happen? Well, what can happen is, I need to get my 120-minute chart right there. The 120-minute chart suggests ABC that it made a leg D. I don't like these long-legged dojis because it just outlines for you a parameter that is the high and the low, which is on the top side today, you've got 1573. On the downside, you've got 1472, a point. So it really needs to spiral away from the high. If you want to see a VIX go high, it has to go to, I'd say, 1610 or higher by the end of the day. So at this particular point, I'm not getting signals here because there's a flat stochastic there as well. It's just going to be a sudden news event. Something's going to happen if it's going to, and then you will get the Dow down 50 to 60 points, the S&P down 7 by the end of the day, and the VIX actually starts to move higher. That to me would be a signal saying, okay, the little choppy sideways action says now choppy to the downside rather than choppy up and down within the range. Thought I'd get that out of the way. Now let's go to something else that I want to discuss. I had a question about Tesla. So Tesla is trading now at 224.41. The questioner sent me an email saying I had a beautiful plan to short Tesla at 231 point, I can't off the top of my head remember, 50 or something like that. It was just perfect. And then asked me for my opinion. I shouldn't have given my opinion, because my opinion was that, yeah, that would be a good entry point. I'd just be a little careful, because Tesla just shows just enough strength to say that if, and I said if, your plan is great, but if it goes to 333.50 to 334 420, somewhere around there. All of a sudden, the 200-period exponential moving average of 237 becomes a magnet. So that's the only thing that I would do. But later, I mean, immediately afterwards, I said, no, but I like your idea. And he had, in fact, started a short position. Thank you. Not as much as he wanted, but a short position. So sometimes getting information when you've done, I'm impressed with what people do. They're not impressed with what they do. People do. I remember talking to, when I was giving a talk back in 2009, it was after the low that we got the exact day of the low where our subscribers went long. It was maybe 3 months later where it was still, the Dow was still barely off the ground. And I remember saying, you're looking down, start to look up, lift your head up, use your own instincts. When you see a GE trading in the below 10, surely that's an opportunity regardless of what anybody says. I'm sure some of you would have wanted to, if you were looking at it back when it was in 18, 19, you would have said, man, if GE ever gets to under 10, I want to get it. Use your own integrity. You people listening now, I bet there are a lot of times that you said, man, if I'd only not listened and I'd done whatever it is. Try to put the things together. These are parameters that we give here. We're not all perfect. We do the very best we can with the, no matter how many decades we've been here, with our limited resources, because it's always limited, because we're only human beings. So please use your own integrity. If you're getting this gut feeling saying, I'm going to start lightening up again here, or I want to add, everybody's just too bearish, I want to use your own integrity. All you need to do is put in a stop or a buy, stop to cover yourself with a percentage loss that you're just comfortable with. 2%, I'm out of here, no problem, I don't feel nothing. 5%, I'm fine, it's fine. 10%, oh man, I could take 15. Some of us don't like that. I don't like to take percent. I feel that I can always get back in, and I will make it up. It's easy to make up. It's very difficult to come back if you're down 25% or 20%. That's just my belief. Some people don't care, and they've bought these things for the long term. So I thought I'd just throw that out. Why? Because of this Tesla call yesterday, email yesterday, and I immediately said, uh-oh. Man, 231, and I've got it's stalling over here. I've got to clarify that was just, my thinking was just to be careful that if there was, my preference would be to short Tesla higher. That's my own preference, but his plan was perfect, and he got, what was the high yesterday? 231.15. I can't remember now exactly the number that he wanted. I believe he did get started the position, and that, I love that. So let me sum it up one more time. When you have your own analysis, and sometimes the analysis is just, it's the back of your head. You've been sitting there saying, I want to buy X at 30. And you just say, I'm waiting. And when it gets there, you say, oh man, now it's at 30, should I? If your instinct was to do it, your analysis was to do it, and then suddenly someone says, oh, X is going to 90. And you said, I wanted to short it at 30, or I wanted to buy it at 30, and they say it's going to 20. You should also use your own integrity. Why? Because you've lived with this idea for a lot longer. You've maybe traded that position a lot longer than the person talking about it. They might just be doing it on an analysis, a technical analysis. Well, you know what? If Tesla breaks 220 support, I'm going to say dreaded H is probably going to go lower. It's going to test 210. If it breaks that, it's going even lower to test the August the 24th low of 195 round number. What happened to a round? I typed that in. I remember distinctly. 195 round number low for Tesla on the 24th. It's 824. So I do want to emphasize that many times you'll find that your position is maybe in conflict with someone else, but don't let that bother you. Just do what you were going to do, keeping in mind that you need to feel comfortable with your position in the shorts. Let's go to Lou in Nashua. Lou, how are you?
Fine, thank you. Fine.
Good.
Thank you for the advice on the stock yesterday.
Oh, pleasure. Yes.
Dust. I took it out the same day, but made a good profit.
Yeah, great. Yeah, that was perfect because you saw what happened. It had a fabulous session, and today it's down.
Yes.
Good, nice trade. So you wanted to look at?
Either shorting the NASDAQ or S&P.
Okay, so now this is what I'm going to recommend to you. It's the exact opposite, but it's not dissimilar to the thinking yesterday. So let me explain what I'm looking at here. I'm looking at overall, I'm looking at some positions, and I'll explain as I'm doing it. I'm looking at some positions. Look, Ford, this is a cyclical stock, is up at 15.48. It's up 12 cents today, up 0.78. General Motors is up at 33.59. It hit a high of 33.88, and we are long from the 31s in General Motors. Now, when I go to FCAU, which was looking great yesterday, it's having a little bit of a dip today, but I'm calling this, at least for now, a peak B in Ford, Fiat Chrysler Auto. This is the Fiat bought Chrysler, and now it's called Fiat Chrysler. But everywhere I look, people are buying Jeeps. I know someone who bought a Jeep just recently, and they're just flying off the lot. So Jeeps are doing well. You look around, all of a sudden you see these little Fiats everywhere. And the Ford and General Motors products. And now, just over the last few days, I'm saying to myself, okay, take a little time when you're driving and start looking out for the big GMCs, the trucks that are being carpooled for these kids to go to school in. Huge things, but like little buses. And yet I'm seeing more and more of them. So my impression is that this is a market that on the shorter term might pull back, but there's just enough strength to say that we could go sideways a little longer. So it's almost as if I'm saying to you, yes, maybe a short position. Would you go short the SPY? Would you go short the E-minis? What would you be looking at?
I'd be looking at the triple shorts.
Okay, so you'd be looking at the the SPY. SD, is that SDS?
Yeah.
Yep, the triples. Okay, yeah. Ultra short. Okay, so this is what I'm going to suggest to you. You see the Dow was up, and then it was down. It was actually down quite sharply early morning, and then it came back, was up quite nicely, and now it's up 7. The S&P's up 40 cents. To me, it's one of those situations where I actually want to see the trend, and then I'll jump on board. But it could also be a situation that if the Dow drops and the S&P drop again, if the S&P say the S&P, let's go to the SPY because it's a little easier for people to be looking at the SPY. If the SPY, which is at 203.22, suddenly pulls back to 202.70, say 50 cents from here, that's kind of where I would get the confirmation that that's not a bad place to actually short, but you've lost your best opportunity. So this is what I'm going to do with you. I'm going to say SDS at 20.62 had made a peak, and let me go A, B, C. It made a peak D at that top on the 24th, and now it's made almost like a 1-to-1 to the downside. So this would be the area. Now, this is going to be very interesting, Lou. This is the area. I'm not sure this is the area where you're getting a major turn, but it is the area where you could at least get a little bit of a spike in the SDS. It might even be one of those, like yesterday, a one-day pop and drop. So this is what I'm going to suggest to you. At 20.62, the low today was 20.50. I'm going to suggest that you make the low today of 20. Oops. Can you hold on? We've got a break coming up.
Sure.
Okay, good. We've got Lou on the phone from Nashua wanting to do some shorting here. This is probably a good position, but I would only call it a quick trade. So I'll be back straight after this. We look at the numbers. Dow's up 1, S&P's down a fraction. Be right back with Lou in Nashua.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and so let's just do this. So, Lou, what I'm going to suggest to you is if you want, you can put a stop in based on the SPY. You can buy the SDS, but put a stop based on the SPY at 203.84 was the high today. I don't think it's going back to 203.84. I'm not sure what can do it. So make the stop 1 penny above 203.84. Make it 203.85 on your position, whatever you take. And I would say you could start the position right now as we're speaking.
Okay, great. Thank you. Sir.
Okay. Good luck with the trade.
Thank you.
Thank you very much for calling. That's Lou in Nashua. So one of the reasons why I did that is in the SPY itself, the 120-minute chart has gone to a peak E. Yes, the stochastic's at 92%, the MACD's flattening out. That says there's limited downside as long as these technicals hold. That's a 120-minute chart. But limited downside doesn't mean to say that you get into the candle of yesterday at 3:30 in the afternoon that had a low that was somewhere between, it just moved, between 202.95. So we're already into that. And the low is 201.92. And if this sell-off goes into tomorrow, then all that will happen is that you just be able to lower your buy stop. No, If you're short the SPY, that is, you're lowering your buy stop. And if you're long the SDS right now, what did I say it was? 20.68. I'd put a stop. You could even use the SDS. 20.50 was the low. 20.49, I'd put a stop there. And what I'm looking for here is possibly the 2105 is the 9-period moving average, and they may be going a little higher to 2133. That's going to be the big test. But there are enough stocks that are possibly rolling over here. We've tried to add to our positions, the short positions. One is just about a point to our advantage at this point, is to point down. But we'll see. We'll just see. For instance, I was looking at the healthcare insurers, got stopped out of that position, but I think that it's going to be a very good position coming up. So we'll see what happens. This is going to be a very important session. And in the way that I'm looking at the volatility index, the VIX is suggesting, where did it just disappear to? Right there. The VIX is suggesting TVIX. Did I just do that? Yes, I did. TVIX is suggesting it's in leg E. The low earlier this morning was 614. Then it went down to 610. And now it's at 650. Hey, 40 cents. Wow, that's a big move, percentage-wise. It's at 5.69. I think risk-reward, you've got almost a left side, right side price time match without getting to the price. If ever there was at least an opportunity with a doji candle in the 120-minute chart of the TVIX, this is it. So, I was talking about the TVIX, but let's go back to the VIX index. There's the VIX. Yeah, EFG, huh? EFG. Wait, that's not what I had before. A, B, C. All right, well, I'm not going to change things. This is a trough G at this particular point. So I think this is the opportunity for the VIX at least to attempt a rally. That's really the issue. All right, risk reward. I'm talking risk reward. Now, let's just go back to things because we're about to wrap up. Today's Tuesday, and what do we have? We have a great options hour. So stay tuned. You've got Think or Swim. You've got Kevin coming up. Kevin Hinks waiting, and I'm sure that he's going to give some really wonderful ideas that you can just test out. You can check him out. He's the expert. So here we go. Now, let's do this. The Dow, INDU. If the Dow, which is trading at 17,211, starts to pull back, the 9-period moving average is 17,074. I'd use that as a benchmark. If it starts to dip under that, then you've got to be somewhat careful because that would suggest strongly that you've got a peak alternate count F in the Dow 120-minute chart. On the upside, I'm not sure if we can do it right now. That resistance at 17,280, the 200-period moving average. I'm just going to put it in right now so you can see it. This is the area of resistance right here, and I'll make it smaller. So have a great day. I'll be speaking with Tom a little later on in the afternoon. And otherwise, I'll see you back. Check out my opening call. I think you'll find it very interesting.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.